Adelante for the last 15 years has been providing institutional investors, mainly corporate and public pension plans, access to commercial real estate through the listed securities market. REITs have performed very well year to date, outperforming the S&P 500 for a couple of reasons. One is, while commercial real estate has been a big concern of many's, the companies themselves have been able to recapitalize, and they've been able to have access to the equity markets, primarily because of the price discovery of the stock marketplace, the access to information, and the transparency associated with that, and the willingness of CEOs to issue more equity. As that's happened, the bond market has opened up to the companies. As more money has flowed to bond funds, real estate has a natural place for bond buyers to come and provide credit. So these companies have done extremely well because they've had access to both debt and equity. The apartment sector is interesting for us at running a diversified portfolio because it's probably the first property type that's benefiting from the recovery. The capital markets didn't really seize on the apartment companies, and now as the economy is starting to get some traction and no new supply, you're really seeing the benefit of demand rolling through. I think as we look at 11 and 12, new supply probably starts to make some sense for some companies, and we expect to see some of the apartment companies that have been developers to start reigniting projects again. Certainly the last year and a half around the Washington, D.C. Metroplex has been probably the greatest driver of jobs and demand for multifamily housing. We are seeing strength in the financial services area. It hasn't been as bad as people originally anticipated, although there are some anticipated cuts coming. And then we've seen West Coast, some strength there around new technologies and healthcare. It's a concern that we have a lot of Americans today out of work. I think that when you look at commercial real estate, we've actually shut down construction. Maybe that's part of the reason why we have a number of high unemployment. It was really at single-family housing. But today, 90% of the workforce is working, no new supply. There's just natural pressure because of demographics to house America. And I think that we do need to get people put back to work, which will start filling some of the office buildings that are out there, put more confidence back in our consumers to help drive retail sales as well. REITs are celebrating their 50th year in existence. And I think at this point in the conference, kind of day one, is people continue to be very excited about the performance year to date. I think that we have to look a little bit further out into the future and see what is really the impact of some of the moves the Fed's making on quantitative easing to see if we can help keep rates low, which again will benefit the companies as well as making them attractive from a yield perspective. I would say the mood here is pretty good. It's a 180 degrees better than it was 2 years ago in San Diego, when there was no prospects of refinancing. The equity markets had shut down and the debt markets had really seized. So it's a 180 degree view.